Ladies and gentlemen, Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada. Today's date is May 21st, 2024. Let's get started. The CPI data came out in Canada today, and the commentary is that the inflation report appears to be low enough for the Bank of Canada to cut rates in June, with the markets now attaching a 50% chance of a bank cut at the next meeting. That was up from 40% pre the CPI. So that's good news for the dollar Canada, bad news for the Canadian dollar, and we did see the price move higher. However, technically, what happened? The price moved up to test its 100 bar moving average on the 4-hour chart. That level comes in at 1.36736. It also fell short of the 200 bar moving average on the 4-hour chart. That level comes in higher at 1.36812. The price has since rotated back to the downside and currently trades at 1.36395. Also in play is this swing area through here where we had a number of different swing lows going back in time. Note that in trading last week, the price low came down to the 38.2% retracement of this move up from the December low to the March or April high here. That level held not once but twice, and in trading this week on Monday, the price low came down toward that level before finding early buyers against the support level and pushed the price to the upside. So, with the data coming out here today, the price action finding support against the 38.2% retracement, the buyers are trying to take more control in this pair. The problem is the technicals are also in play with the 100 and 200 bar moving averages on the top side on that 4-hour chart holding resistance. So we'll see if the price over time can get above those levels, keep the bias moving to the upside in this pair, and in the process give a more technically bullish bias for this pair. If it can't get above these two moving averages, then we got to look toward more support and resistance type trading in this pair as it battles between the 38.2% retracement and the 100-200 bar moving average on the 4-hour chart. Let's just take a quick look at the hourly chart to see if anything is in play for it. And if we take a look at that, here's the 100 bar moving average on the 4-hour chart holding resistance. Since then, the price has now moved back below the 200 hour moving average. That's the green line right here at 1.36445. So there is some disappointment in the inability to get above those moving averages on the top side, and we are seeing it being reflective in the break below the 200 hour moving average. At the low, down further is the 100-hour moving average at 1.3619, getting below it, and also the low prices from, and this swing area down here is needed to increase the bearish bias going forward, not to mention the 38.2% retracement. So buyers had their shot, couldn't get through the moving averages on the top side. Sellers are trying to take back more control. We'll see how all this pans out going forward. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.